Nature uses only the longest threads to weave her patterns, so that each small piece of her fabric reveals the organization of the entire tapestry. Richard Feynman. This video is not financial advice.
It may lower barriers of entry to central banks from emerging economies and enable them to participate in a state-of-the-art international settlement network. And linking up several such platforms may significantly improve the landscape for cross-border settlements. The international railway continues on to Europe through the Swiss mountains until it reaches Jura at the French-Swiss border. Here, we are exploring the use of a wholesale CBDC for cross-border settlement, jointly with the Banque De France, the Swiss National Bank, and a private sector consortium. It involves a wholesale digital euro, a wholesale digital Swiss franc, and a tokenized financial instrument. Building on phase 1 of Project Helvetia, it was just announced a couple of weeks ago. And for now, let me stop here. Our CBDC journey is based on collaboration.
A few months back, King Solomon found a PDF by the Banque De France that mentions testing with Ethereum and the XRP ledger. This Forbes document says Banque De France completed interbank settlement with a private blockchain provided by SETL. SETL is a company that Marjan Delatannie now works at. She started at Swift, went to Ripple, now she's at SETL. This Forbes article states this pilot unleashed a series of experiments leading up to the latest simulation on a public blockchain. A public blockchain means a crypto. Now, the Banque de France is working on a project Jura with the BIS Innovation Hub. Another odd coincidence is Michel Bond, former Ripple employee, appeared on the Banque de France's YouTube channel to discuss digital assets. In this Banque de France article it states, but I must stress the urgency here. We don't have much time left, 1 or 2 years. Everybody is talking about CBDC, but first, and much earlier, we need to regulate crypto assets and then implement EPL. This is because central bank digital currencies are going to utilize crypto assets. That's why they need to regulate them.
Will all have a place to play in the future of finance. So, we're not sort of saying it's one or the other. We think there'll be a combination. On the central bank side, what we're doing there is building on the relationships we have with central banks through our Ripple network. So we have to work with central banks to get approvals when we go into a new country with our Ripple net products. We're building upon that, and we've been talking to central banks for quite some while about what technology they would like to deploy their central bank digital currencies, whether that be the wholesale central bank digital currencies or retail. And they want a private ledger approach, right? So what we've done is we've taken the XRP ledger, which is a public, permissionless public network, which has several currencies on it already. I mean, XRP is the native currency, but there have been several thousand other currencies issued on the XRP ledger.
There are several thousand currencies on the XRP ledger. Every bank that partnered with Ripple uses their software and needs approval from the central bank to do this. This means Ripple has had an open dialogue with central banks and now are offering a private XRP ledger digital currency that is custom tailored for central banks. If central banks adopt private XRP, this is a huge vote of confidence, as well as all banks under the central banks will have to adopt the XRP ledger software for their banks to accept the digital currency from the central bank. This open source technology will be the standard that the central bank sets for the entire nation. Public XRP, the XRP we own, has a specific use case for cross-border payments.
We've taken that, which is really built for high performance and built for payments, and we've created a private version for central banks. So that enables a central bank to basically mint or create their currency, distribute it, most likely through commercial banks, and then actually monitor the transaction. So we're working with them on that technology, and then also working with them on the policy, which is going to be a big element on the success factor. I'll take a pause there and let my fellow panelists say something.
Yeah, and if you don't mind, which central banks in which countries are you working on or working with?
We're working with many of them. They're mostly under non-disclosure agreements. So I'm not at liberty to share the details, but I would say we are working with them in each continent apart from Antarctica. the study by the Bank for International Settlements estimates, I think 80 to 85% of central banks are doing some work. We're at different stages. I mean, we have some active projects, and then we have some early stage discussions. A lot of the banks are still doing research rather than deploying projects. It's relatively early in the life cycle, I think, for CBDCs. I think it's going to be 2 to 3 years before major economies like the US or the Eurozone deploy a CBDC. China is obviously further ahead at the moment. They are well advanced on their pilots.
James mentions they are working with one central bank on each continent except Antarctica. A minimum of 6 central banks are currently working with Ripple on central bank digital currencies. Australia was a pioneer in distributed ledger technology. The North American continent is Canada, the US, Mexico, and Greenland. I wonder which one of those central banks are working with Ripple.
And Ripple also helped create Ledger. And we can talk more about that at another time. But for the purposes of today, the focus on Ripple is on taking traditional international remittances technology like SWIFT and displacing it with lower cost, more reliable, and real-time ways to move money around the world. And that's really the focus of Ripple.
Matthew Lemire, co-founder and managing partner, Blockchain Co-Investors in Fifth Era. This company invests in Ripple. They specialize in blockchain and unicorn investments. The slides that he is showing during the demonstrations list some interesting financial institutions right along with Ripple. Bank of America, which is a known, but Visa and PayPal, which are both Earthport customers. The logos above Ripple are Bank of America, PayPal, FXall, Currency Cloud, CLS, and Visa. The slide has been shown in the past, but this company that has invested in Ripple is showing it during a blockchain conference and has added SWIFT to the slide. Does this venture capitalist know something we don't? Or is he simply speculating and misinforming a blockchain conference, risking his reputation?
That central banks should really just create money for the fiscal authorities to spend into the economy. And the only limit that should be applied to that is really whether inflation gets out of hand. And in the absence of that, then they should just keep on printing and pumping more money into the economy. Right. What do you make of that theory, and is there a better approach?
Well, back in the 1930s, John Maynard Keynes, the father of macroeconomics as we know it today, wrote that when interest rates get down virtually at zero, the only way to stimulate the economy is to use fiscal policy and to finance that spending through the central bank. In other words, he said the same thing that Stephanie Kelton's book says. Well, so that suggests to me that that conclusion you just gave is not modern. It's not even monetary, because actually it relies on fiscal policy as a delivery mechanism. Mm-hmm. And by the way, if you actually read it, it's not a theory. It is just accounting identities that connect the central bank to the government through what we used to call, when I was at school, unpleasant monetarist arithmetic, which I know you're familiar with the term. And so it is none of those things, modern monetary theory, it is none of those things. And then I guess put it this way, if the fine print, most people don't mention the fine print, and I commend you for doing that you only do it until inflation picks up. Well, that's exactly what we're doing right now. As I said before, we're counteracting a deflationary bubble, or crater rather, with inflationary looking policies. And the exit strategy will be complicated as we discussed. But if you only do it until inflation goes up, well, isn't that exactly what we've done for the past 30 years? Central banks create money every week by buying government debt, providing that money to the government to spend every week, every issue. And they've been doing that at exactly the right rate to keep inflation at around 2% for 30 years. So I suggest to you there's no free lunch here. Actually, the last time that anybody tried to do what is described as modern monetary theory was in the United States in the late 1960s, when they were struggling to finance the Vietnam War. And so the Fed was persuaded to keep interest rates low for longer, even though inflation pressures were building up. And what was the result of that, Jeff? Well, that was the The Bretton Woods exchange rate system blew up. That closed the gold window. And the great inflation of the 1970s spread around the entire world. So I think I've said enough about modern monetary theory. I'm obviously not a fan.
Powell has admitted that inflation numbers are higher than 2%. The Fed is supposed to raise interest rates and cut spending, but there is political pressure to keep the easy money coming. The numbers are higher than 2%, and the last time inflation numbers were higher and the Fed didn't tighten, it ended with the U.S. defaulting on our currency. U.S. dollars used to be backed by gold. When inflation numbers got out of hand, Nixon suspended conversion to gold. We moved from a gold standard to a fiat standard. We are repeating history. We'll have a new Bretton Woods, where the monetary system will fundamentally change. I believe that crypto networks will play a vital role in this new system.
And Masha, sorry, if I could just 1 second, just one small intervention, because I think James made an important point, which was the last time we had this big dislocation in the financial system, it was the 2008 great deleveraging, or the 2008 financial crisis, in which we privatized gain and socialized losses. And I think one of the issues and points that crypto and blockchain represents is the reverse of that. It's to effectively privatize losses and socialize gain, and to kind of put that model on its head. When you think about what a stablecoin represents, like USDC, it is a better model in some respects, financially and from a risk management and prudential point of view, than commercial bank money, where depositors ultimately suffer from fractional reserve banking, where the bank is ultimately able to lend out money and take risks and create leverage. These architectures are not replicated when it comes to a stablecoin like USDC. And that's an important distinction. That's a standard higher than you would see for commercial bank money and traditional deposit inside the banking system. And so I think this is part of where the argument we have to make collectively as an industry is that we're not eroding regulations nor consumer protection standards. We're actually making exponential improvements on a lot of the issues that regulators care about and want to see.
Liquidity is slushing around the system, and banks can lever every dollar they get for $10. This is where we're seeing the cracks in the foundation. This is a fundamental flaw. As Augustin Karsten has stated, CBDCs will give the central banks complete control. The next Bretton Woods that we are approaching, fractional reserve lending, will be banished, while the central banks have complete control issuing CBDCs. CBDCs are going to interact and utilize crypto asset networks. The next Bretton Woods is a digital Bretton Woods, and we are moving from a fiat to a hybrid system of digital currencies and crypto networks.
So yeah, I mean, very, very interesting set of issues that we have here. So one, CBDC or not, banks are already under a fairly significant threat of disintermediation. So the fintechs have, for instance, already disintermediated banks from a large segment of the payment space. So banks used to have a fairly high returns on the payment function. No longer, payments are earned zero fees now. So that's one. Second, in terms of banking disintermediation in particular, I'd referred to this in terms of cross-border trade. The systems were fairly inefficient before, before some of these new distributed ledger technologies came in. I mean, companies like Ripple, like TransferWise, etc. I mean, now you have almost pretty much real-time settlement systems instead of the 2-3 days it used to take because of the multiplicity of systems talking to each other and so on. The interesting question now, because despite all the payments, banks are still the sole repository of deposits in the system. Whether you invest your money in mutual funds and stocks and bonds or whatever, at the end of the day, it comes to a bank deposit. What happens if retail investors, retail depositors deposit directly with the central bank?
Technology is disintermediating the banks. The central banks are updating to digital currencies, and fintechs will replace commercial banks. The new Bretton Woods is rapidly approaching. The higher the inflation, the closer we are. It's just a matter of time. I would rather have questions that can't be answered than answers that can't be questioned. Richard Feynman. Thanks everyone for watching. If you could, please take a moment to like and share my video. It would be greatly appreciated. If you're interested, I have a Patreon where I post research for these videos, early videos, ad-free, weekly Zoom meeting, and a Discord chat. Thank you.